Rudy Philippek Van Dyke from FNArena joining me. Rudy, a note from Bell Potter really powering Digico Infrastructure REIT yesterday.
Yes, I've previously pointed out that DGT is essentially a value play in Australia on the AI data centers theme. Share price really is not moving. Bell Potter did a general update on REITs. They're not the only ones. Most people are reviewing the outlook for REITs. It's all due to RBA rate hikes, higher bond yields, puts a bit of a headwind on the sector, with exception of some of the really undervalued asset plays, and that is Digico Investment REIT as well. So hence the upgrade. Bell Potter thinks yes, the headwinds are there, but way oversold, way too cheap.
What about the overall REITs, Rudy, given that it is likely that we are going to now see an interest rate hike?
Yes, it's not a straightforward proposition. Some of the REITs carry high debt, so it's a negative. Some of the REITs actually have quite some growth under their belt, and that means that higher interest rates should be compensated for by growth. And that's always the trade-off, of course. But in the short term, the market tends to get a sell first, ask questions later approach. But some of those REITs, some of those property developers, they will overcome the headwinds, and I think they will ultimately lead to a positive share price response further out.
All right, let's get now into the energy space. Karoon Energy, it's actually been downgraded.
Yes, they came up with a very strong quarterly to finish off 2025 on a very strong note. But as I like to point out always, what happens for companies like Karoon Energy with the share prices is probably more determined by what happens to the price of oil and gas. That remains uncertain, of course. In the short term, price is going up, so that means the share price is well supported. But at Karoon, because they have to make investments, there's a lot happening operationally. Their guidance for the volumes this year is actually lower than what they achieved in 2025. Long story short, it's a very challenging year for them. It doesn't mean it's going to be negative, because not everyone has a sell rating or a neutral rating on the stock. But Quarry has taken the view that the negatives might well outweigh the positives this year.
Rudy, we all like to invest ethically. Do the brokers like it?
That's a good one. For those who follow fund managers, there has been some news flow this year on ethical investments. It hasn't all been positive. We don't really have a lot of brokers who cover the stock, but Ord Minnett does. And Ord Minnett is of the view that the sell-off we've seen, and the sell-off has been quite pronounced in recent times, the sell-off is overdue. Obvious value play according to Ord Minnett. I think from memory there's quite some healthy dividend yield there as well now.
Rudy, what are you looking at more broadly in terms of ahead of reporting season, or I guess when we're in the midst of reporting season and we don't get to see you during that period, I don't believe, because you're super busy too. But in terms of what the outlooks are going to come through amidst these calls for a super commodity cycle that we're in the middle of, and also, this value over growth thematic.
Yes, well, one is linked to the other, and I think one prediction I can very confidently make, I think, is that volatility will be extremely high. We've seen that in the past two reporting seasons. We already, if you look at what happened in January, we already saw quite volatility really picking up. In particular for companies that update the market, it's not always clear. Like for example, with companies like Korea, it's not always clear immediately what exactly was wrong with the update. But there's definitely the share price doesn't wait around to look for answers. At one stage, that share price was down 40% on the day, and you could almost see all the brokers scratching their heads and thinking like, what is happening over there? I think that's indicative for the reporting season. What we will see, yes, momentum is definitely with the mining companies. They come out of a bear market for years, haven't done very much. Their shareholders have been crying in their handkerchiefs, but they're now laughing all the way to the bank. That probably will determine the reporting season as well. And for all the other ones, unfortunately for the moment, winter has arrived, and probably a big indicator could be that the RBA at least, and let's actually, as investors, we have to hope that they do raise in February, because at least we're getting over that hump. Because I believe as long as that's hanging in front of the market, it really is keeping sentiment very low locally. And that's why we continue to underperform international markets, and that's why some of the share prices can't really put together two positive days.